Welcome back to another trade recap. Today is March the 17th. Glad to be back at my home office. I did go away for a few days, so that's why I didn't have any trade recaps for you guys. But now I'm going to be back to my regular scheduled program. Feeling a little bit sick, but hopefully that doesn't last too long. But with that being said, let's go into exactly the overall markets the past few days. It's still been fairly tricky, right? Still no continuation in the markets, which is very unfortunate. My trading this month has been fairly break even. Besides the one trade that ended up taking last Wednesday, which was a super solid textbook trade on Tesla. Besides that, my statistics, as you can see right here, only up $21,000 for the month, 50% win rate, profit factor 2.0, 60% win rate, average win to loss ratio of 2.05. So as you can see, my statistics for this month are still fairly solid. That's primarily made up of one trade, as I mentioned, which was last Wednesday on Tesla towards the upside. Besides that, a lot of break-even trades, right? A bunch of losers this month, right? Some pretty big L's that we've taken, some wins, some losses. And as you can see, that's just what happens when there's no continuation in the market. So there's really not much to kind of talk about as of recent. The past month, I'd say we've been stuck inside this consolidation period. The SPY and Qs haven't really been doing too much. So of course the tech names aren't moving as well. So that's just kind of the reality. As you can see, my P&L for the month of March has been fairly stagnant, which was kind of expected kind of coming into this month, just because the overall market was still inside the range. So until we can break outside the range, right, we're just going to have a lot more mean reversions, reversals, which aren't as ideal to, of course, trading the break and retest. And as I mentioned, I've been a little bit slower to kind of adapt to these current market conditions. So we'll just be waiting for primarily the markets to finally start trending again, right? Who knows when will that happen? When we have some sort of news event. Currently, there's a bunch of uncertainty in the markets going on with the war, going on with a bunch of other things. So hopefully we will get some more guidance here with FOMC tomorrow with the Fed speaking. But with that being said, I just kind of want to hop on and mention, right, this market is very difficult. And that's just kind of the reality, right? January, start of February was absolutely fantastic. Nice trades towards the upside, nice trending markets. And then, of course, end of February, start of March so far have been very difficult. So if you've been, right, taking trades and there's no continuation, that's normal, right? It's kind of normal. A few months out of the year, it's very normal to be right? Break even, maybe in a little bit of a drawdown period, right? It's very normal, especially in your trading. And with that being said, I just kind of want to go on to some of the trades that I ended up taking for this week. Before we do that, let's kind of go into the game plan that we had coming into market open here today. Let's go on to my daily watch list. So coming to market open, what I like to see is the reaction that we have off our previous day highs, 670 and 603 coming to market open. Another big day with an overnight move, a big overnight move coming to market open. So what's been happening recently is, right, the VIX, of course, is elevated, right? We're around 20 on the VIX. But what's been happening is that the markets have had too big of moves overnight. So by the time the market opens come New York session, it's going to be very tricky because we've already had such big moves in the overnight session, right? Either due to news or some sort of other factor, which the New York session is very slow, which is not as ideal because a lot of times we like to trade 9:30 to 11 a.m. The only times we don't have nice moves during those periods is when we have overnight movers and we have some other external factor that's affecting the market in this current market environment. That's basically the news and of course the war that we have going on. So that's why it's been a lot trickier to trade the New York session open. And a lot of the times, right, we'll have big reversals because let's say we have a big gap up, right? We have too many gaps on the charts that usually is set up for a gap fill reversal. So that's why there's been a lot more mean reversions in the markets, a lot more reversals, and they're a lot more based off the higher time frames and a 5-minute setup. What I like to see today is the reaction that we have within the first 10 to 15 minutes. My main watches will be the indices themselves. As for Tesla, Nvidia, and AMD, fairly neutral, so just keep an eye out for the levels being the previous day lows on these names. As for everything else, really not too much interested. I'm going to be a little bit more hands off until I see clear relative strength on any name. So any trades that we do take, of course, are going to be on lower sides pre-FOMC, and also we don't have a clear direction in the market as well. But with that being said, let's go into the number one trade that I took yesterday. This was for Monday, ended up being a previous day high retest, textbook previous day high retest, as you can see, price within the first really 10 to 15 minutes. Nice push towards the upside, broke above our previous day highs, looking for that retest continuation. Even this trade, you can see offered some nice continuation, but the contracts didn't move as much, even on the Wednesday's contracts, right? Nice kind of retest here, push towards the upside, hit a couple take profits, and then eventually, of course, reverse back towards the downside. But this trade right here is super solid on Tesla. Only about a 3-point move here. And of course, the markets ended up rejecting off our previous day highs yesterday, so not too much continuation. But this was the trade I ended up taking yesterday. And then today, I ended up taking two trades. Looking back on it, didn't really like these two trades here on Amazon. My best area was that previous day high. So, of course, an immediate retest right off your previous day highs would have been the best scenario. Then I was looking for your pre-market high retest, hold, continuation towards the upside, relative strength compared to the market, fairly aggressive entry. I didn't really like it as much, but it was very low risk. So I ended up taking Amazon, the 215 calls, immediately stopped out. And then, of course, I ended up taking the 84% rule and then end up scaling some actually alpha at high of day. Normally, I don't do that. But of course, in this market, there's been a lot more mean reversions and reversals. So I decided to take some off, about 50%, and then end up cutting the rest here for a small loss as well. So basically two losers on Amazon today. Was definitely on lighter side just because we do have FOMC tomorrow. Not expecting too much here in the markets. But yeah, that is a quick kind of recap of what I'm looking for and what I'm expecting moving forward. I'm just expecting the overall markets to range until we have some sort of news event or until we break outside the higher time frame. So usually it's some sort of big catalyst that's going to affect the market. Besides that, we can just expect mean reversions and reversals, of course. So until then, right, we want to be a little bit more hands off. We'll see what shapes up coming into market open tomorrow. And yeah, with that being said, I will see you guys all then. Take care, everyone. Peace.